Hi, it's Mike Vanetis, and today I'm going to talk about, is now still a good time to purchase a home, or did you kind of miss the boat? Let's talk about that. So first of all, the reason I'm making this video is because over probably the last 3-4 weeks, I've had a handful of people who have shared this concern that, you know what, prices are out of control, they're artificially high, we're just going to wait. We're going to wait, and we think prices are going to, some people even think prices are going to go down. And as much as I kind of think I know why they're saying that, why they would think prices would actually go down, I'm going to share some thoughts with you which will hopefully help you understand that that's probably not going to happen. So first of all, what is going on in the market? So demand, super high. Why is demand high? Well, you have historic low interest rates. Rates have basically never been this low in the history of interest rates, right? So that's appealing to people to purchase for obvious reasons. You have millennials who are at that peak age when they're starting to make more money, start families, that sort of thing. So you've got all these millennials flooding the housing market and wanting to buy homes. So then you have everything that happened because of COVID, right? So before COVID, it was already, we already had low levels of inventory, which I'll go kind of talk about that in a minute. But basically what happened was COVID created more demand. It was, you had all these people, first of all, from the city, for example, who were in high density areas and, you know, high rise buildings where they're, you know, super close to the neighbors, breathing the same air, that sort of thing, and they want it out. Then you have a whole slew of people who, maybe a husband and wife, were both going to work, and then all of a sudden the companies, you know, went on lockdown. They said, all right, everybody's going to work from home. And then after a couple of months, they said, well, gosh, productivity isn't dropping at all. Why don't we just let everybody stay working from home? We'll shut down the office, maybe get a smaller office and whatever, and let people, you know, work from home. So now all of a sudden you have this situation where one or both spouses are working from home and they need their own workspace, right? So that was part of it. You have a strengthening economy. So the economy's getting better. So that's creating more demand. And then just the normal everyday thing that you have, where you have, you know, people getting married, needing a home, people getting divorced, and so now one household is becoming two households, so they need a home. You have job transfers, all these different things that are happening, just creating a lot of demand. So let's talk about supply for a second. So in the real estate world, they say a healthy market is about a 6-month supply of homes. What does that mean? That means that based on today's sales pace, there would be enough homes to last 6 months. So if everybody who is looking for a home today found a home, inventory would be completely depleted within 6 months. So that's a normal, healthy market. It's not a seller's market, it's not a buyer's market, it's what they call a balanced market. Well, last year, just before COVID hit, we were like a 3.2 month supply. So almost half of what a normal, healthy market would be, right? So high demand, low supply, you've got that dynamic happening. Well, where are we at today with inventory levels? We're at like a 1.4 month supply of homes. That's kind of ridiculously low. So you virtually have no homes on the market. You've got all this higher demand for homes. And so that's creating this situation where you got all these desperate people who need homes. Anything that pops on the market is gone immediately. So now people are frantically, you know, putting over asking price to get into a home because they've already been burned 3 or 4 or 5 times with losing out on offers. And so it's the people that are looking for homes that are actually the ones driving up the prices. It's not the builders, it's not the lumber companies. Yes, lumber prices have gone up, but that's really just a symptom of people driving up prices based on demand and need. So that's what's happening in the market. So they're still saying that prices, like from May of 2001 to May of 2002, they're still expecting in Chicago, the Chicago metro area, prices to go up about 12.4%. 12.4%. That's a lot. That's still a crazy high amount of home appreciation. That means if you were today looking at a home that was $350,000, That means next May, you hold off and you say, I'm just going to wait till next spring. That $350,000 home today is now going to cost you $393,000 next year. Now, that's a $43,000 loss of money, right? You just lost $43,000 by waiting. But here's where it gets even worse. So inflation right now is also kind of out of control. And so what do the feds do when inflation is spiraling out of control? They raise interest rates, right? So let's just say interest rates go up 2% next year. Okay, so next May, not only is that 350 home now 393, but now interest rates are 2% higher. That means on that now $393,000 home, just basing on like a 5% down payment, that home will cost you over $600 more a month to get in the same exact home that it would cost you today. Not a great decision if you're thinking about waiting, right? I hope that makes sense for you. So where's this idea that home prices are actually going to drop in the next few months? Where's that coming from? Well, here's where it's coming from, and it makes sense on the surface, but only if you don't really know the fundamentals of what happened back in like 2007 and what's going on today. Okay, so back then in 2007, I was around for that, and what happened was a number of things. One, you had lenders who, you may have heard subprime loan fiasco. So you had all these mortgage companies that were not only incentivized, but actually mandated by the government to provide loans to people who normally wouldn't be able to get loans. It was actually what's called the CRA, the Community Reinvestment Act. And the idea was, and it seems like a good idea on the surface, but the idea was, you know what, owning a home is good for everybody. It's the American dream. Everybody should have a right to own a home. And so the mortgage industry was actually pressured to provide a certain amount of loans to certain areas or certain income groups, that sort of thing, that normally wouldn't be able to get a loan. Okay, people who had no money to put down towards a down payment, people who had bad credit, people who didn't make a lot of money based on the amount of debt that they had, all those things, and lenders were just giving loans left and right to all these people. Well, shocker, a few years into being in that home, all these people started losing their homes because a lot of these people signed up for adjustable rate mortgages, didn't really even understand what that meant, or they were kind of led down this path of thinking like, well, home prices are going up so much, but that by the time our rate does go up, we get refinanced, we'll have more equity, we can, all these different crazy ideas that just people were misled into thinking. Well, so then all these people started losing their homes, and then those people losing their homes caused home prices to stall and then actually go down, and then it was just this downward death spiral, right? So like, as an example, you would have somebody who maybe bought a home for $250,000 down, or bought a home for $250,000. They put zero money down, and so the loan was $250,000, and then a few years into it, their home is worth $200,000, right? So there's no way they can actually sell the home, even if they wanted to do the right thing and sell their home and rent or whatever financially made sense. They couldn't do it because if they would have to bring like $50,000 to the closing table, and people weren't willing or able to do that sort of thing. And so there was a term back then called jingle mail, and that was basically that was when people would put the keys in an envelope, send it back to the bank, and say, "Here's your home. It's yours. We can't live here anymore." And so it was just this big, horrible thing where all these foreclosures flood the market, which then created other homes to lose value, and it just was a bad situation. So if you're thinking that, well, yeah, that's what's happening now. You got all these people who, because of COVID, they lost their jobs, and then the government stepped in and said, well, mortgage companies have to offer forbearances, which mean basically if you lost your job, You don't even have to prove it, but if you lost your job, you could basically tack on your payments to the end of your mortgage and kind of have a pause on your mortgage, right? Well, so a lot of people are thinking that, okay, well, those are all coming due now and the economy's still not back to where it was. And so all these people who lost their jobs still don't have a job. And so here come all the foreclosures. Well, here's why that's not happening. It's because the big difference is that $250,000 home that in 2007, lost 25% of the value. Today, it's actually gained 25% of the value. So now that $250,000 house is maybe worth $300,000 or whatever. And so people can sell their home. They don't have to foreclose. They can sell their home, pay the mortgage company what they owe, and walk away with a nice little profit for themselves that they can then put towards another new home or a rental, whatever it is that they need to do. So that's what's happening, and there's no reason to believe that there's going to be this big drop in home prices. And again, based on what experts are saying, because of the supply issue, prices are going to keep on going up and up. And I don't know how the supply issue is going to resolve itself, but I don't see it happening anytime soon. So that's my 2 cents. Hopefully this makes sense. Hopefully this was somewhat insightful for you. And hopefully you can make some good decisions based on it. All right, thanks.